Well, we also put the spotlight on the Indian economy and most notably its domestic currency, the rupee. The Indian rupee has outperformed other emerging market currencies in the past 6 months. But the question being, what does this mean for the global economy? That's what our next report decodes. Take a look.
The Indian rupee marked a significant milestone by closing at its strongest level against the US dollar in 6 months. The Indian currency touched 82.83 rupees per dollar this week. The immediate effect of those moves were witnessed in the Indian stock markets, where the benchmark indices raced to fresh record highs. But for an import-dependent economy like India, the strengthening rupee brings a range of economic implications. A major benefit comes in the form of reduced landing costs for crude oil, which is primarily priced in dollars. With over 80% of India's daily crude requirement being imported, a lower landed cost of oil could act as an anti-inflationary measure. The impact extends to government finances, with lower oil import bills allowing for a decrease in both revenue deficit and fiscal deficit. This fiscal discipline positively influences external credit ratings, contributing to a stable economic outlook. Import-intensive sectors, such as capital goods and telecom, stand to benefit from a stronger rupee as it makes imports more favorable and cost-effective. Conversely, export-driven sectors like tech, textiles, and pharma may face challenges. A strong rupee makes exports more expensive, reducing competitiveness of Indian companies and products in the global market. Foreign portfolio fund flows are heavily influenced by the strength of Indian rupee. The recent strength of the rupee has attracted substantial fund inflows, reinforcing India's appeal to foreign investors. Beyond financial markets and the domestic economy, the strengthening rupee also boosts outbound travel for Indians. With increased purchasing power, a growing and affluent Indian consumer base fuels demand for global tourism. Bureau Report, WION World is One.
For more on this, we're now being joined by Amrish Baliga, independent market analyst. He's joining us live from Mumbai. Thanks very much for being here with us today, sir. I will first start by asking you that, do you see the Indian rupee strengthening further against the US dollar? We've seen how the Indian rupee has outperformed other emerging market currencies. What's your take on it?
Absolutely, because we have seen huge inflows into India, which has in fact strengthened the rupee, and that's expected to continue. Recently, India has been included in the government bond index, emerging markets of JP Morgan, and I think this should bring in about $25 to $30 billion. FI investment into equity markets last year was about 1.65 trillion rupees, and that's expected to continue as India would be one of the best performing markets even going ahead. And there are a couple of other reasons. For example, India is in a position to cut rates, but waiting for the Fed to make the first move. If you look at our current account deficit, that's quite low. Our balance of payment has improved majorly, and now it's about $9.2 billion. If you look at the Forex reserves, it's about $625 billion, which is quite close to the all-time high of $641 billion. And the government is also trying to reduce imports. The focus is on Make in India and exports. The offset clauses for imports ensures that the production is done in India to a large extent. And if you look at, like you rightly said, crude is one of the major imports into the country. But now if you look at the government focus on EVs, increase in ethanol usage, and more importantly, India's recent oil find in the Krishna-Godavari basin, this will add about 45,000 barrels per day. That's about 7% of the domestic production. And with the growth projected for India over the next decade, I think the Indian rupee can only get stronger from here.
Right, Mr. Baliga, you speak of how the Indian rupee will only get stronger from this point. Talk to us about what a strong rupee means for the Indian economy.
No, this clearly means that the imports will become cheaper, but at the same time, the exports need to be more cost efficient, which I think India will achieve since we are building world-class facilities across various sectors. And it's positive for the foreign institutional investors as they do not lose out on the nominal gains due to currency depreciation. So, and at the same time, this will also make rupee more acceptable in international trade.
Right, and which sectors do you think will perform best if the rupee strengthens further?
See, I mean, all the sectors which use majorly imported raw materials, I think they will benefit, especially which are crude-based, crude oil-based, like paints, tires, polymer-based industries, and the sectors which use electronic components like the white goods, automobiles. I think all of them will benefit. And also the outbound tourism, I think that will see a huge push as I think more and more Indians will travel abroad because the dollar will be cheaper as compared to earlier.
Right, Mr. Baliga. Thank you so much for being here with us today and sharing your insights with us.